So is it a factor that the crew has been discovered? Well, I want to make two comments. The first one is, this is so common anytime I've ever been involved with a group of traders and the trades that I've talked about have gotten stopped out. And one of the people made a comment, in fact I may have even placed it in here, where they wanted to know, how do I keep this for, it was, should I add the 4 pips onto the entry I want, or was this just one of those things that occasionally and hopefully rarely happens? Listen folks, you've got to get it out of your head that there's some kind of guarantee when it comes to trading. The unexpected can always happen. I could try and tell you that, well, this was just the broker stealing stops, and these rat finks are just out to get us. I don't know. I really have no idea. If we look at the timing, this is right about, this bar closed right at what's called the European Open. Remember, I talk about as early as 2 a.m., but then from 3 to 4 a.m. is the beginning of the sweet spot. Well, that is right here. Okay, so after this line is the sweet spot. Now this ties right in with the question that was just asked. This is what happens before the sweet spot is fully open. The market makers can push the market around on very little volume. In fact, let's take a look at that particular volume. I mean, look at this. It's below average volume. So the market moves down and closes up on below average volume. That's actually a bullish sign. That's indicating that the market has the potential to move up. But the point is, you've got to be careful of when you're getting into the trade. I try and talk about the risks and what I think might happen in the video, and this is just one of those. Remember, go back and watch those 2 daily videos. I absolutely made a point. You've got to be careful of whipsaws. These are very risky trades, and this is why. Because if the trade gets triggered on an automatic trade, remember last night especially I said this is not one that I would want to commit capital to if I wasn't able to sit there and watch it. And what I specifically mean by that is, look at this. After the first entry here, the market turned back down. That's a sign of no momentum, folks. Okay, that's my sign to get out. And then again over here, the market popped up, hit the entry, turned right back around. That's my sign to get out. And then finally over here, the market had some momentum. Okay, but the real issue here is, don't try and put the market into a box. That's my second point. The first point was, quite frankly, I don't remember. I've gotten on a different track mentally. Second point, though, I do know, was don't try and put the market into a box. Okay, the market can do absolutely anything. We're not in control. The only thing that we can do is understand when we have a high probability trade to gauge the likely direction of the market. And sometimes that may take 2 or 3 times. You may have to go into the market a couple of times in order to get the trade off. How should a trader act to prepare to enter a position based on having recognized a sneak attack as a pattern? And this came in conjunction with what I did yesterday for somebody who was asking about the 3-bar reversal. So here we have a sneak attack pattern. Using the 3-bar reversal after the sneak